Welcome to this deep dive from TalkTickers. We're here to cut through the noise.
That's right.
Today, we're getting straight into the insights from Box Inc.'s second quarter fiscal 2026 earnings call. That was held August 26th, 2025. Our goal really is to give you a clear, concise rundown of Box's performance, their strategy, what it means going forward.
Yep, cut through the overload.
Exactly. So you walk away informed, ready to connect the dots, no fluff.
Let's do it.
All right, let's kick things off. Quick look at the Q2 FY26 numbers. So Box reported non-GAAP EPS of $0.33.
Which beat consensus by about 2 cents.
Yeah, comfortably beat. And revenue came in strong too, $294 million. That's up 9% year over year.
Also topping expectations, analysts were around, $291 million.
Roughly, yeah. So solid start there.
And what's interesting, I think, is looking underneath that. The remaining performance obligations, RPO,
Right.
that jumped 16% year over year. Huge number, $1.5 billion.
Okay, so future revenue looking strong.
Exactly. Billings grew 3% or 6% if you adjust for currency.
Constant currency, right?
And the net retention rate, NRR, that ticked up. It's now 103%.
Oh, that is an improvement. Better than last quarter and year over year.
Yeah, definitely a positive signal that customers are sticking around, maybe spending a bit more.
Okay, so what was the market reaction? I heard it was kind of muted at first.
It was a little quiet initially, yeah. But the stock did get a nice little bump in after-hours trading.
So maybe constructively bullish. Is that fair?
Yeah.
Acknowledging the beat, liking this story.
I think that's a good way to put it. Solid numbers, promising strategy, but maybe not a blowout reaction.
Okay, let's go deeper then. What really drove these numbers? And what are the strategic priorities? Because this wasn't just luck.
Well, financially, one thing to note is the difference between GAAP and non-GAAP EPS. GAAP was only $0.05.
Compared to the $1.33 non-GAAP. Big difference.
Yeah, and management pointed to a non-cash deferred tax headwind, about $0.14 impacting GAAP.
Ah, okay, so the underlying operations are stronger than that GAAP number suggests.
Definitely. Non-GAAP gross margin was healthy at 81.4%, operating margin 28.6%.
Strong margins.
And cash flow looked good too. Cash from operations up 27% year over year to $46 million. Non-GAAP free cash flow up 9%, almost $36 million.
So the financial engine seems pretty robust.
It does, looks balanced.
And what about the customer base? Any shifts there?
Yeah, they're definitely moving up market. Nearly 2,000 customers are now spending $100,000 or more annually.
Wow, okay, that's up 8% year over year.
Right. And their Suites offerings, especially Enterprise Advanced, are really driving things. Suites now make up 63% of total revenue.
Up from 58% a year ago. So customers are buying into the broader platform.
Exactly. More premium solutions, deeper integration.
Which probably leads us straight into their strategy, right? The whole AI thing.
Absolutely. The core focus is this AI-first operating model. It's centered around Enterprise Advanced and what they call Box AI agents.
Okay, break that down. AI first.
Yeah.
System of record for unstructured content.
Yeah. Box wants to be the central hub, the system of record and action for all the documents, images, videos, emails, all that unstructured stuff that businesses have tons of.
Which is what, like 90% of corporate data? Stuff that's traditionally hard to automate.
Precisely. It's this massive pile of potential that's been hard to unlock. Box is saying, we can use AI agents to automate workflows around this content.
Like what kind of workflows?
Think client onboarding, M&A due diligence, clinical research, document handling, contract management, even things like speeding up loan applications by extracting info automatically.
Okay, so applying AI to real, often manual business processes using the content stored in Box.
That's the idea. And they're pushing out products to make it happen.
What's new on the product front?
Well, they announced general availability for their enhanced extract agent that's for pulling structured data out of documents. And Box Hubs went GA too for building intelligent portals.
Hubs. Yeah,
Plus, they launched the beta for something called the MCP Server. We should probably talk about that.
definitely.
What else? Updates to the Box AI admin console, the AI Studio, AI units, basically giving admins more control and users more tools to build and manage these AI processes securely.
Right, control and confidence seem key. Now, you mentioned AI models earlier. Are they building their own or partnering?
This is where it gets really interesting strategically. They are not picking sides in the AI model wars.
Right.
Very. They announced support for OpenAI's GPT-5, Anthropic's Claude 4.1,
The big ones.
and even xAI's Grok 4, often like right when these models launch.
So customers can use whichever model they prefer, or maybe even multiple models.
Exactly, flexibility. They've also integrated with ChatGPT, so you can access Box content from there. Partnered with Anthropic on finance solutions, they're a launch partner for Snowflake's OpenFlow. They're building an ecosystem.
Okay, and that MCP server you mentioned, what's the deal with that?
Right, MCP Server. Box sees a future where companies might use dozens, maybe hundreds of different AI systems.
Okay, yeah, I can see that. Different tools for different tasks.
Instead of copying your sensitive data into every single one of those systems, which is costly and a security nightmare, the MCP server acts like an abstraction layer.
A go-between.
Sort of. It lets external AI agents securely access and work with the content inside Box without moving it.
Ah, so the data stays secure in Box, but different AIs can still leverage it through this controlled layer.
Precisely. Maintains integrity, security, governance, while letting you use all these different AI tools. It's a clever architectural play.
It sounds like it. Now, there's a lot of skepticism about AI projects actually working, right? That MIT report, 95% failure rate for pilots.
Ouch. Yeah, that's a huge number. And Box is directly addressing that skepticism.
Oh, what's their answer to why their AI stuff won't fail?
Their argument is that their platform approach mitigates those risks. They handle the tricky bits, the storage, the vector embeddings needed for AI understanding, the permissions, the UI, the integration with all those models we just talked about.
So it's more out-of-the-box ready, reducing the integration complexity that trips people up.
That's the claim. They focus on high ROI use cases, trying to deliver quick wins and tangible productivity gains, which helps build momentum and avoid pilot purgatory.
Makes sense. Get some wins on the board quickly.
Yeah.
What about selling this? How's the go-to-market looking?
The Enterprise Advanced plan is clearly the engine here. Deal counts nearly doubled sequentially. That's strong momentum.
Better than expected.
Seems so, yeah. And the price uplift they get when customers move from Enterprise Plus to Advanced is holding steady, at or above their 20-40% target range.
So they're successfully upselling existing customers to this higher tier.
And partners are playing a bigger role, too. Deloitte being a title sponsor for BoxWorks this year is a pretty big signal.
Yeah, that shows ecosystem maturity. Speaking of change, there was a big leadership transition, too, wasn't there?
Yes, Mark Whalen, the chief revenue officer, retired. He was there for 6 years, helped them scale past $1 billion.
Big shoes to fill.
Definitely. The new CRO is Jeff Nam, coming over from Google Cloud.
Google Cloud, interesting. So bringing in someone with experience at that kind of scale.
Exactly. He's tasked with guiding them towards that $2 billion revenue mark and beyond, really leading this next AI-driven growth phase.
Makes sense. You need the right leadership for the next chapter. Now, how are they making sure the whole company is AI first, not just the products?
Good question. They're really focusing on internal transformation, equipping employees with AI skills, encouraging experiments.
Standard stuff, maybe?
Well, yes, but they're also scaling best practices and, crucially, embedding AI-first expectations into hiring and performance.
Oh, okay. So it's becoming part of the DNA, not just a training course, trying to boost their own productivity with AI, too.
That's the goal. Make the whole business run faster and smarter using the tools they're selling.
Okay, so with all that context, what's the guidance looking like? What do they say about Q3 and the full year?
Right, guidance. For Q3 FY26, they expect revenue between $298 and $299 million. That's about 8% year-over-year growth.
Okay. And billings.
Billings growth projected around 10%, helped a bit by FX.
And margins.
Non-GAAP operating margin target is about 28%, though they noted that includes a 100 basis point headwind because their BoxWorks conference expenses shifted into Q3 this year.
Ah, okay. Timing shift impacting the margin slightly. And EPS for Q3.
Expected $0.31 to $0.32 non-GAAP. But again, that includes a pretty significant non-cash tax effect, about 13 cents.
Got it. Lots of non-cash noise in the EPS numbers. What about the full year? Did they update that?
They did. They actually raised full-year revenue guidance by $5 million, now expecting $1.170 billion to $1.175 billion.
Still around 8% growth year over year, but a raise is a raise?
Yep. And they raised the full-year non-GAAP EPS guidance, too, to $1.26 to $1.28.
Even with that big deferred tax headwind for the full year, how much was that?
A hefty $1.58 headwind for the full year impacting non-GAAP EPS. So raising guidance despite that shows confidence in the underlying operation.
On full year operating margin target?
Still targeting roughly 28% non-GAAP, so consistent profitability focus alongside that growth.
Okay, so summing it up for investors, what's the big picture takeaway? Sentiment seems cautiously positive.
I'd say so. Strong beat, raised guidance, improving NRR. Those are definite positives. The non-cash EPS stuff muddies the waters a bit, but the operational trends look decent.
But investors are still watching billings closely, despite that strong RPO growth.
Yeah, it seems like the market wants to see sustained acceleration in billings. That 16% RPO growth is great, signals future revenue, but they want proof it's translating into faster current growth. A bit of a show-me story still.
Makes sense. What are the key things to watch for next? Catalysts.
BoxWorks is the big one, September 11th and 12th in San Francisco.
Their big customer conference.
Exactly. Expect deep dives on the product roadmap, hopefully some big AI customer win announcements. That could really move the needle.
Okay, BoxWorks is key. What else?
That Q3 billings number. Hitting that 10% growth target will be crucial proof. Also, watching the continued migration to Enterprise Advanced, are they maintaining that price uplift? Are they adding net new seats alongside the price increases?
Right, it can't just be price hikes, needs user growth too.
And keep an eye on large deals, especially in the public sector. That Japan Ministry of Defense win was interesting. More deals like that could signal traction in big, regulated industries.
Got it. Lots to watch. Okay, let's shift gears slightly. Time for our This Is Not Financial Advice segment. My wild but maybe plausible trade idea.
All right, let's hear it. What's cooking?
Okay, so we see the momentum in Enterprise Advanced. We see the NR improving, driven by price and net seat growth, which is important. And Box is positioning itself really clearly as this system of record and action for AI agents working with unstructured data.
Right, the strategic narrative is clear.
So my pitch is a long straddle on Box options, ticker BOX, specifically targeting the period after BoxWorks.
A long straddle. Okay, betting on volatility, buying both a call and a put. Why?
Because the implied volatility seemed kind of low after earnings. Like, the market isn't pricing in a huge move around BoxWorks yet.
But you think BoxWorks could cause one?
I think it could. Management is hyping it up, biggest set of launches ever. If they deliver something really groundbreaking, maybe a massive AI-powered public sector deal or a truly differentiated AI agent framework with killer use cases,
then the stock could pop significantly. The call option pays off.
exactly, big upward re-rating.
But if they stumble, if the launches feel incremental or the Q3 guide feels soft or a competitor makes a move,
Then the stock could drop sharply and the put option pays off.
so the straddle profits from a large move up or down. You don't care about direction, just magnitude.
Precisely. It's a bet that BoxWorks will be a significant enough catalyst to break the stock out of its recent range, one way or the other. It hedges against just guessing the direction and focuses on the event-driven volatility potential from this AI pivot.
Interesting. Betting on the hype and the execution risk around BoxWorks. Definitely not financial advice.
Definitely not. Just connecting some dots.
So wrapping up, Box had a solid Q2. Beat expectations, raised guidance, driven by Enterprise Advanced and the early traction with Box AI.
Yeah, the strategy around being the hub for unstructured content in the AI era seems to be resonating. RPO growth is strong, NRR is improving.
The financial model looks healthier, but the market seems to want a bit more proof, especially on accelerating billings growth.
Right. So while the initial reaction was maybe a bit muted, the underlying trends look positive. BoxWorks in September is definitely the key event to watch for more clarity and potential catalysts.
Yeah, will this AI-first strategy really kickstart a new growth phase? That's the big question.
Absolutely. And remember, everyone, this discussion is for informational purposes only. It is definitely not financial advice. Always do your own research.
Please do.
Thanks for tuning into this deep dive. We value your feedback. Let us know what you think, and we'll catch you on the next one.